Hello everyone. My name is Ray, and you are watching the stream for uh, commerce, University Text Guides for Commerce. So basically today we're gonna run through some general advice of what you should be expecting to cover in a commerce degree. It's just an overview, and that's about it. I'm gonna go later on into the details of what we provide as a brand, but this is just a general lecture. By no means it's supposed to be comprehensive for each topic, but it's a very comprehensive guide for the entire degree, I guess. So, a little bit about me. My name is Ray. I'll be your lecturer for today. I'm currently studying commerce at the University of Melbourne. I'm third year. And a few fun facts about me. I am a huge fan of economics and econometrics. I like working with data. And when it comes to other stuff besides studies and work, my favorite food is pizza. um, I really like memes as well, so you will see plenty of those embedded throughout the lecture slides. And some of you might tell from my accent, I am an international student, like most students studying a commerce degree at the University of Melbourne, right? I think it's almost half, if not more, of the students are international. I'm not sure on the statistics, but it's very common. Now, as a student myself, I really needed some guide when going into uni. I think all of us do. There are much more resources for high school, especially in Australia. To once you get into the VCE program, for example, you know what to expect because the entire process is standardized. But there are less notes. There is always less information about uni, right? What to expect out of uni, and the reason for that is because different universities operate differently. But at the end of the day, it's still a standardized process, right? Of what each uni has to cover to a certain degree, right? All of them have the same. All of them have similar majors. All of them try and cover similar fields. Especially the big ones. For example, Melbourne University or Monash University, right? They cover the big general streams. But even other universities do the same. Um, Smaller units follow basically the path of larger units, what they're trying to do. So, first of all, let me introduce the brand. So, if you've heard of 8R Notes before, you know very well what Uni Notes is all about. Essentially, 8R Notes was a company that provided free resources to students to help them get by through high school. And University Notes or Uni Notes is the exact same thing. We provide free resources for students who are going to begin their university journey, right? We provide study notes, lectures like this one. We have a community. We provide videos which guide you through university, and these guides are just information of which will help you do better at university. We also provide newsletters, discussion boards, articles, and subject reviews, which very soon, once you get into university, you will be very interested about the last one, subject reviews. I can promise you that. Everyone wants to know more about the subject that they might consider studying, especially from peers that have already gone through that process. I think that's the most valuable review that you can get. Now, coming soon, we will also be providing actual guides. So far, these are the free resources, right? They are free, they are comprehensive, don't get me wrong, but they are not going to be as comprehensive as a full guide on how to succeed in each major, right? So let's say you're studying law, or you're studying commerce, or you're studying psychology, or you're studying biomedicine or medicine. There will be a text guide which will teach you how to succeed in it, if that makes any sense. So once you get into a university degree, you obviously want to succeed and thrive after you finish that degree, right? Or during it. And you want to make the most out of university. So we provide soon we are going to provide notes for biomedicine and medicine, commerce, engineering and maths, law, psychology, and science, which is mostly the science part is a bit more general. Um, we have content summaries for core subjects. They are written by recent university graduates from across Australia, not just the University of Melbourne or Monash University, but from across Australia. We cover the fundamentals for a range of degrees, if that makes any sense. If you really are more interested in what we provide, and you should be, you can go to uninotes.com. That's where you can get access to these notes, which will essentially uh, give you information of what you should expect out of your degree. It can help you plan ahead, if that makes any sense. Now, given that I made just this slide, given that we're on this slide, I would really appreciate if you guys answer this Slido content. So I was wondering if you could let us know which are you most interested out of all the resources that we are trying to provide for you guys. Are you more interested in free notes? Are you more interested in subject reviews? Are you more interested in discussions, free lectures, free videos, premium university books, or university advice articles, right? So again, the university guidebooks, they're going to be really comprehensive. Um, but I would like to see if you guys could answer and let us know what's the resource that you want us to be focused more on. Free notes, 67%, alright. Premium university books, that's true. Guidebooks are the same as free notes, it's just more of them for a particular topic. Yeah, I think I should make the differentiation for this one. So free notes are just general, but premium university guide, it's for example, commerce degree, let's say finance and economics, and you will have a detailed guide of what to do exactly. Free notes is general. Free lectures is alright. Free videos. Free videos. Cool. Free notes. Yeah? Epic. Thank you for this. Let's see. 5 students have answered. Alright. I'm going to stop the poll right now. Thank you for answering. Alright. So let's keep going with the lecture slides. So towards the middle of this lecture, I have set up Slido, as you saw. We're going to have a Q&A session, so you guys can ask me as many questions as you want. Again, what I'm going to talk about today is just the general the majors that you're going to experience, or the majors that you can choose from when you go into a commerce degree. But obviously, I'm going to have a Q&A session for you guys as well. Since I am a recent commerce graduate, you can ask me as many questions as you like. Even if you are an international student, you can ask me questions about that as well. Yeah. Keep in mind there are no silly questions, and you can choose to make the questions anonymous. So please feel free to make any questions or comments and ask about anything. It's just a Q&A session today, right? It's just an info session. So just a breakdown of the lecture today. I'm going to be covering 2 blocks of content. So the very first one is what to expect from a commerce degree, and I'm going to cover the general topics that you will cover in a finance major, in an economics major, in an accounting major. And then we're going to go through content block 2. So we're going to have a 10-minute break, a Q&A session, and then we're going to go through content block 2, where we are going to go through actuarial studies, the management major, and the marketing major. So essentially what I've done is I've broken up the entire lecture into subsections where I cover what to expect from each major, so you guys can have a general idea of what major to choose, once you go into a commerce degree, because you'll have the opportunity to make that choice at the beginning. So let's start. Just a side note, what you make out of a degree totally depends on you, just to make sure you guys get that. Some might choose to study science over commerce, and others might do the opposite. Truthfully, you'll hear some say that commerce is not the most useful degree, but I will highly caution against this mentality because it totally depends on your circumstances and your end goals, right? Just a heads up for this. In fact, science students will always try to get jobs in the commerce area, even that's where the highest paid jobs are. For example, IB, right? Where you're basically expected to be, where you can, if you get into IB, you're basically guaranteed to be a millionaire by the age of 30, right? So, there are a lot of highly paid jobs in commerce, but the catch is that you should really prepare early on, if that makes any sense. You should try. The catch is that you should do what you like, what you enjoy. So, from my experience, if you like economics, do study economics, and if you like finance, study finance. But you will hear very frequently, especially once you get into university, that STEM is the most important. It really depends. If you like STEM, study STEM. But if you like commerce, I would say stick with commerce, because what's most important at the end of the day is studying what you enjoy. And if you do something that you don't enjoy, you won't excel in it, and that's not really something that any employer is looking at, right? No one wants to hire somebody that doesn't excel in a particular area. You can do whatever you want as long as you excel in it. You basically can have a good future set for you. Also, keep in mind there are many pathways that you can follow after a commerce degree. And a note for this one: once you go, especially into the University of Melbourne, there will be something called career fairs, and at these career fairs, you will have the opportunity to actually you will talk to HR managers of different companies, or you will talk to employees of different companies trying to sponsor their company at the university campus or online. And the reason they do that is because they want to have access of the best talent. So once these career fairs happen, I would highly recommend you actually go there and talk to them and see what they're looking for, and what the qualifications of each individual, or what qualifications are they looking for from an employee, right? So let's say you want to work at Google, or you want to work at Atlassian, or you want to work for Goldman or JP Morgan. The best thing you can do is just to go and ask the people that have actually been in the industry for that particular company, and they can give you the best advice. I think I found that the most useful resource out of all when I was at university, especially in my first year of studying commerce. Career fairs are very important, whether they are virtual or whether they are in person, because they provide an opportunity to get information, but it's also an opportunity to network. And as you might know, since you are interested in commerce, commerce is all about networking. It's all networking ideology, right? Now, there are different majors that you can choose from a commerce degree, such as finance, economics, accounting, actuarial, management, and marketing. There's also more. It really depends from university to university. But just a heads up, these are like the general, like the six big ones, if that makes any sense. And as I said before, you do need to do a lot of research if you choose any of these majors. And the reason for that is because, again, you want to know what are the qualifications that certain employers ask of you in order to get a job. It's not, for example, you do accounting and then you get a job as accountant, or you can progress very easily as an accountant. It doesn't end there. And I'm going to cover the qualifications later on that you might need. There are certain exams that you need to pass at the end, for example, the CPA or the CFA or the CA, if that makes any sense. These are things that you do need to take into account once you study these once you major in these degrees, because that's what will actually allow you to not only just get employed, but primarily to excel in your career ladder. So let's look at finance. Finance, at least at the University of Melbourne, is probably one of the most popular majors for commerce students. However, it is more so for those who are mathematically oriented. There is quite a lot of smart people in this category because a lot of them are trying to go into IB or private equity, or they want to become financial dealers, financial analysts, CFA accredited. So a lot of the people in finance, a lot of them want to do something related to high finance. They want to get high finance jobs. For example, quant trading, right? And especially with trading, right, or quant trading, you really have to be mathematically minded to excel in that category, right? So finance, just a heads up, there's a lot of vocabulary that you need to be familiar with, and you also have to be very much mathematically minded. So it's a difficult area, especially once you get to study level 3 subjects, right? It becomes really difficult because it's essentially a new language that you're trying to learn, and then you're trying to do math with this new language, right? With this new vocabulary. It can get a bit hectic if you try and go for the hardcore finance subjects. However, keep in mind that you can also study the easy finance subjects as well, since finance might just be a passion for you if it's just a side thing. But if it's your main pursuit, I would highly caution you guys that it is very much for those who are mathematically oriented. Now, some of the main concepts that you need to learn about finance are investing, compounding interest, and banking, right? These are like three major kind of areas that you're going to study. Now, obviously, a finance degree is a 3-year degree with multiple credit units, right? Each subject is 12.5 at Melbourne University. So obviously, I can't give you guys advice for 120 credit units, right? So I can't cover all the major topics for a finance degree, but I can give you a general overview. So what you will be expected to learn is essentially investing, right? You're gonna learn about investing. Now, investing into assets. The thing with investing in assets is that you need to first of all understand what assets are, right? Asset is anything that has a claim on cash flows, right? That's an asset. So assets can be real or they can be financial. Real assets is products and services. For example, even machines, right? So let's say you are a company and you own a factory, the land, the property, the stock, those are assets, right? Now, those are what we call real assets, but you also have financial assets. Now, financial assets are something that has the claim on the cash flow of real assets. Let's say you have a factory, and this factory is obviously a building, it has equipment. This is a real asset. This will generate products that then will sell and will generate a profit, right? Financial assets are something that will have a claim on this cash flow. They will have a claim on this profit. For example, shares, preference shares, bonds, etc., etc., etc. They are a claim on cash flow. That's what you need to understand, first of all. But with investing, you need to understand that if you are investing in assets, some assets will be risk-free assets, but some assets will be risky. Now, risk-free assets are usually thought of as government bonds, because obviously, let's say Australian government bonds, they are referred to as risk-free, even though they are not completely risk-free, but that's how we think of it, since the risk is almost negligible. We think of them as risk-free. As I said, the vocabulary can get a bit confusing. But when we're talking about these bonds, the claim on the cash flow is basically the cash flow that the government will provide to you. And it's essentially a way to keep up with inflation or even beat inflation in certain cases, right? It's the risk-free rate, right? Risk-free assets are going to provide a return, which is called the risk-free rate. Now, if you invest in riskier assets, you will get risk premium, right? Because you've exposed yourself to more risk. So in finance, the general, especially under the topic of investing, what you should be expecting to learn is that with more risk exposure, you will get more reward. But, right, so in finance, what we usually say is that you want to maximize, all right, so you want to, I can't draw properly. So with finance, what we say is you want to maximize upside risk and you want to minimize downside risk, right? So you want a distribution of results which is skewed to the right, if that makes any sense. You want the potential to make a lot of profit, but you want to minimize the potential of losing your money. But how do we do this, right? So this is just an overview, right? This is an overview of investing. You can go into more detail about it. It gets really complicated in some topics. As you can see, there are two graphs that I have here. You have to learn about the capital allocation line, and you have to learn about the investment frontier eventually when you learn investments. So this is essentially, let's look at the capital allocation line. So this is, again, the general, very basic fundamentals of finance. It can get very complicated from here, but the capital allocation line is essentially the line that's saying, well, if you have a mix of a risk-free asset and a risky asset, then you can probably manage how much risk exposure you want to have, right? Because some people like having a risk-free asset, they like generating enough money that they can beat inflation, and they're happy with that because they've beat inflation and they also have a little bit of a risk premium. They're happy with a little, and they're happy with they are very risk averse, right? That's their utility function. They are very risk averse. That's what maximizes their utility function. They like having money and not losing money at all, right? But the gains are very minimal. However, if you expose yourself to a lot of risk, like some people, they are risk loving. For example, people that gamble in a casino, you can make a lot of money, right? So let's say you put all your money into Microsoft shares or into Apple or into Google, right? If you just put all your eggs into one basket, the potential is that you can become a multi-millionaire in a decade, right? But there's also a good chance that you might also lose all your money. That's why in finance we say don't put all your eggs into one basket. You will not be rewarded for such risk, right? At least not always. So the capital allocation line is essentially saying if you were to have a portfolio combining a risky asset with a risk-free asset, right? Risk-free asset with a risky asset, well, you can actually measure how much risk exposure you're gonna have, right? Always benchmarked at a risk-free rate. So then all you have to do is you want to determine what percentage of your wealth you want to dedicate onto the risky asset so you can actually have the expected return that you want, if that makes any sense, with the amount of risk that you desire. So the capital allocation line is exactly that. You have expected return on the y-axis and then you have the standard deviation on the x-axis, right? You have the risk-free asset, which is here, the risk-free rate of return, and obviously that's going to be provided by the risk-free asset. So the risk is actually equal to zero. Now, you're going to have another asset called the risky asset, which is going to be anywhere in between here. Let's say the risky asset is located around here, right? So if you were to dedicate the entire wealth that you have onto a risky asset, let's say Microsoft shares, you're going to have an exposure of this much, right? So let me say, for example, the risk-free rate is 3%, that's quite high. And you want, so if you put all your money onto a risk-free asset like government bonds, you will only get a return of 3%. But if you put all your money onto Microsoft shares in, let's say, 1 year, you might get quite a decent return, right? You might get 15% out of it, or even 20%, right? So that's quite a lot of money. That's a huge return. And it's very possible with Microsoft because it's a blue chip company, right? Or Apple or Amazon. This is what we call AAA rated companies by the S&P 500 index. Anyways, by Standard & Poor's measurement, Microsoft and Apple, for example, are really good companies. That's what we call blue chip. They are relatively safe, but still risky, right? Government bonds, just risk free. The government will give you your money back, right? If you believe that. Now, let's say, so if you dedicate 100% of your wealth onto the risk-free asset, you will get 3% return. If you dedicate 100% of it onto the risky asset, you will get 20% return. But if you only dedicate a 50-50 combination of those, you might be right in the middle, right? So you can get somewhere around 12% return, right? So it's this combination of, or it's this segregation of your wealth into different assets that will generate you the expected return that you might want. And some of you might ask the question, well, why would I want only 12% return when I can get 20%? Well, don't forget, once you want only 12% return, you have reduced the amount of risk by half, right? So you are more likely to get this 12% return than to get 20% return. Now, this is if we combine two assets, right? If we have a portfolio of only two assets. But there are many more companies out there, and we don't need to have just two assets to play with. You can have a bunch of companies to play around with, right? And this is where we learn about the risk frontier, right? Or the target portfolio. Now, the target portfolio is kind of the optimal portfolio that you want to invest in, because in finance you will learn about something called systemic risk and unsystemic risk. So these are risks that you're going to be exposed to if a business is operating with any form of, if a business is operating, honestly, whether it has debt or not, you're going to be exposed to risk, right? So a business is going to have basically financial risk and operating risk. So financial risk is any risk that is associated with having a loan, and operating risk is any risk associated with having a business, right? Any business has some sort of risk into it. There might be competition. There might be, for example, if you're into the business of producing vegetables, well, there's the risk of the weather changing. There's the risk of a flood, of a drought, right? So any business is exposed to both of them. Now, in finance, you will only be compensated for non-diversifiable risk, if that makes any sense. Risk that you cannot diversify away. So there's no point in investing to one company. You can invest in multiple companies, and eventually the risk that some companies have will be offset by the risk of some other companies. For example, let me give you a really good example. Let's say you invest in tech, right? The risk associated with businesses operating in the tech world is very different from the risk of businesses operating in the food industry, right? So let's say Coca-Cola, right? Now, Coca-Cola is a really good business because it underperforms the index during a recession, but it overperforms. It underperforms during a boom, but it underperforms during, but it overperforms during a recession. So what I'm trying to say is, this company Coca-Cola, it does really well when other businesses don't do well. So what a lot of huge hedge fund managers do is they, like, for example, if you've heard of Warren Buffett, what he does is he invests quite a bit of his wealth onto this company because it operates in the food industry, right? And then he also invests into Apple. What this does is, well, if things go bad for Apple, his money is still relatively safe because he has a ton of it in the food industry as well. And this is what the investment frontier is all about. It's saying that, well, if you combine multiple assets together, right, you will actually have diversified away all the diversifiable risk, right? And you're only going to be exposed to undiversifiable risk, a risk that cannot be taken away anymore. And that's what you will be rewarded in the market for. Now, keep in mind that this was a very long introduction onto what investing might be about. These are just some terminology that I'm throwing at you guys so you can get familiar with it. Again, it's just an introductory lecture of what you will be expected to learn in finance. It's nothing major, it's just simple, right? It's you don't need to get stressed out if you don't understand this. Honestly, it's gonna take a while if you get into the finance major. Now, there's a lot of stats involved. Even though what I'm saying right now is really generic stuff, right? All that I've said right now is I've said that you have assets which can be divided into real and financial, and financial assets are a claim on the cash flow generated by real assets, right? That's what a financial asset is. Because the price of a financial asset is determined by the cash flow generated by the real asset divided by a return, right? A required return. So essentially, again, financial assets are a claim of real assets. Real assets are factory, goods, and services. Financial assets are shares, bonds, etc. And they are priced based on the cash flow that real assets provide. Then I said, well, these financial assets can be risk free, quite, not really, but almost risk free, and they can be very risky, right? We have government bonds, and we have, for example, tech stock, right? And depending on how much risk you want, that's the return that you will get. If you want a lot of risk, you will get a lot of return. If you don't want risk, you won't get that much return. And then I said, well, you can diversify away quite a bit of risk by using this graph. So the whole purpose of the investment frontier and the diversifiable risk that I tried to introduce to you guys, it's just a concept that I want you guys to keep in mind, because you will learn very soon that finance has a lot of math into it. It's essentially a data science course, or you need to learn a lot. Once you graduate into the finance degree, and then let's say you pursue a master's, you'll very soon realize that there's a lot of data involved into it. You will learn about regression lines. You will learn about estimating the beta. You will learn about omitted variable bias. You will learn about errors, type 1, type 2. You will learn a lot about stats and probabilities, because that's what finance is. It's estimating. It's trying to predict the future, right? But finance can be really cool as well. It doesn't have to be just boring math, even though I find it very interesting myself. Finance, that's what you would call, that's like high-end finance. If you want to work in venture capital firms, if you want to work for hedge funds, if you want to do quant trading, that's where a lot of money is, right? But there's also money in other areas of finance as well. For example, mergers and acquisitions. And if you work for an IB firm, right? Actually, there's a lot of money in most finance job-related firms. To be honest, there's quite a lot. Anyways, so you're safe. If you're in a pretty good position. If you like finance, you're gonna make quite a bit. I mean, that's the general trend of things, right? If you're obsessed with something, you're gonna get it. So if you like money, you will get money. uh, right. So this is just the general overview. Now, at the University of Melbourne, you can do quite a lot of subjects. You can even learn about street finance, and you can learn about personal finance as well. This is about huge firms primarily. This is what you will have to do if you work for a huge firm or something. But yeah, it's really cool. Really, really cool. Now, when we're talking about when we're talking about investing, you have to understand that there are a lot of institutions which are involved in money management, such as hedge funds, whose main job is to identify good investments and charge a commission fee for their services. These funds rely on key core concepts like the capital allocation line and the investment frontier to find the optimal portfolio in which they need to invest in. Again, what is a portfolio? A portfolio is a collection of assets. Keep in mind that this industry is filled with a unique jargon. Thereby, the key to succeed in this section of finance is to learn the language of finance. As I've said, it's not just math, it's math with the vocabulary, which is meant to be, it's actually meant to be confusing, right? It's kind of a good way to, to select for certain people. Now, in finance, you will also learn about securities. But what are securities? Well, securities are essentially any version of debt to asset. It can be a combination of both, right? So we can either have 100% debt or like a loan from a bank, or we can have 100% an asset like common stock. But an asset or a security can be a combination of both. It does not have to be just one. It can be both. For example, we can talk about preference shares or convertible bonds, right? They are a combination of both debt and asset. For example, convertible bonds, they are a bond up until a certain point, and then as an investor, you get the opportunity to convert this bond onto a share depending on the requirements of that asset. So when you buy an asset, there will be a list of rules, right? When you buy a convertible bond, there will be a list of rules that the company has stated, right? And once you read that, you will say, all right, so at point X in time, I have the opportunity to change this bond from a bond to a share, right? That's what we call a convertible bond. It's what you say, it has an option embedded into it. That's what a bond is. It's an asset with an option embedded into it. And that's why it's very valuable. It has a premium associated to it because it has a extra value to the shareholder, right? To the investor, not shareholder. Then you also have preference shares. Now, preference shares are very similar to common stock shares, but they operate very much like a debt. Why? Because preference shares essentially mean that, let's say, Microsoft pays a dividend to, let's say Microsoft pays a dividend to their stockholders, which they do because I have Microsoft stock myself. So I know they pay a dividend, right? So there is a trick to it with preference shares. Preference shares means that you have the right to the cash flow before people who own common shares, right? Remember what I said at the beginning? That an asset is a claim on cash flow, right? Well, preference shares essentially say that, well, hey, we have the right to this dividend before people who own common share. So investors that invest in preference shares have the right to the dividend before it's paid out to common stock people, right? To investors who own common stock. Now, why do people invest in preference? Why do people invest in common stock then? Why don't they just invest in preference shares? Because again, these are investors who are preferred by the company. Well, there are some tricks associated to this, right? It's not just that you're gonna be more valuable to the company for no reason. First of all, the dividend of a preference share is not as variable as common stock share, right? You don't get more. Second of all, the reason why you buy a preference share is because any company has the risk of going under, right? Going bankrupt. Even Microsoft. So what some investors do, they say, hey, we're gonna purchase a preference share and we're gonna have primary rights to the cash flow. But some other investors say, look, I don't believe that Microsoft will fail anytime soon. I'm gonna have common stock in there and I'm happy in this position even though it has a bit more risk. Why? Because common stock shareholders, they have voting rights, which preference shareholders do not usually, right? It really depends from company to company. Everything that I'm saying is, again, with a big it depends, right? This is a major thing in finance and economics. A lot of the things that I'm saying are just a general example. It depends. It really depends on the company to company. They set the rules. But common stockholders, they have voting rights. Preference shareholders, not really. Convertible bonds, definitely not. And bondholders, they do not have any voting right whatsoever. And some of you might ask, well, what's a voting right? Well, you need to understand that some of these companies, they are public. They are IPOs, right? They went public a long time ago. They're not privately owned. They are owned by different people. So people that buy a common stock, they will form something called the board, right? The board member. And board members can actually vote on what the company should do next, Obviously, to be part of these guys here, you need to have a lot of money, right? Yeah. But yes, that's the thing. So you have more voting power if you're a common stockholder. That's the main difference. But it depends, as I said. Now, since I was talking about IPOs, let's talk a bit finance and banking. So later on, again, very soon, I will actually cover a case study. I will cover what Elon Musk did with Twitter, right? And when we talk about this M&As, mergers and acquisitions, right? When we talk about investing, so this were so far we covered just the general concept, right? And something that I missed out on was why should we invest in assets? Well, we invest in assets because of the compounding interest. We get more money, right? So over the years, a good decision, right? A good investment will compound its wealth, right? And it can exponentially increase your wealth. You can become very rich, right? So compounding interest is the whole point of all of what we're doing right now, right? That's the name of the game. Everyone invests because of compounding interest. You can get quite a lot. Now, we talked about the general principles of investing: compounding interest, risk-free, risky asset, optimal portfolio choice. You have large institutions which issue these shares, and shares can be anywhere, again, and these securities can be anywhere from a debt to an asset, right? They can be a mix of both. So we've learned quite a bit so far. But what you also need to learn more about is institutions, right? There are institutions that are associated with facilitating all of this industry that help. Okay, there are a lot of institutions out there that help the industry to thrive, right? That help the industry to actually function. And these institutions are primarily what you call investment banks or venture capital firms, right? These are the guys that make a lot of money for companies and also a lot of money for the employees. I have friends that work in venture capital and they're like, what, 25-year-olds on $500,000? Something crazy, right? So, these firms are very, very, very important. They make a lot of money. They are really important for the economy. Yeah, it's super important to learn what they do. So, the very first thing that they do is they are involved in raising capital. They are involved in mergers and acquisitions. This is a big one. For example, some of you might have heard that KKR just purchased. There's a company called KKR that just purchased. That just purchased MYOB, a big software company, accounting software company out there, right? So this M&A was facilitated by these institutions, right? Now, how do they even do this M&A? How do you know? How does KKR know how much to pay for MYOB? How does Elon Musk know how much to pay for Twitter, right? But the Elon Musk case is a bit more complicated because that was a forced hostile acquisition, and we're gonna come into that as well. But how do these firms know how much to pay for the other firm? Well, remember what I said, an asset is a claim to a cash flow, right? So if, let's say, if MYOB or if Twitter has X amount of shares at a certain price, well, that's not exactly what, the price is always changing. So what's the price that Elon Musk should pay to buy all of Twitter, right? Well, that's a good question. How do we price Twitter then? Well, you price Twitter by this formula, cash flow divided by return that you want. So what you need to do is you need to estimate the cash flow of Twitter, and you also need to estimate the cost of capital, right? You need to estimate the return that is required in order to give us this price. Yeah. So how do we do that? Well, you need to estimate each component individually. How do you estimate the cost of capital? How do you estimate the return that investors require? Well, the best way to do that is through a formula called the CAPM, the Capital Asset Pricing market formula in a capital asset pricing model. So it's a really simple formula. It says the risk-free rate plus the beta multiplied by the market risk premium, the difference between the market return and the risk-free rate. So some of you might ask, what is the market return? That is the return that is promised by a index like the S&P 500 or the Nasdaq or any other index. I don't know, the LME. There are many indexes out there, or the ASX, right? So it gets a bit complicated, if that makes any sense, because obviously, what do you use as the risk-free rate? Do you use a 10-year government-rated bond? Which of them? Because the government can issue multiple 10-year bonds, right? Uh, what's the value of beta? What's the market that we're looking at? Should we use the S&P 500 or should we use the ASX? Oh, and the risk-free rate appears here again. What's beta? Beta is the covariance between market risk and the business that we're looking at, right? So it's a measure of risk. And how do you estimate beta? Do you just use a regression line? So the problem with finance is that you're always looking to predict the future. And that's quite literally very hard to do unless you have a crystal ball, right? That's the problem with all of this analysis that we're doing. I personally find it super fascinating, very fascinating. But yeah, that's what it is. Some of you might ask, well, isn't the formula a bit too simple? And the answer is there are multiple formulas that you can learn. You can also learn about the FAMA French formula, where you kind of take into account business size, gross stock versus value stock. There's a lot that goes into it. But the main idea is that it's hard to predict the return on capital, right? It's really hard. Because there's another formula that you need to use, which is essentially this is an easier formula where you're essentially required to there's another return that you need to measure, which is essentially this cost of capital here, that is essentially determined on the weighted average of equity and debt, right? So this is something equity, the return on equity is different from the return on debt, right? So companies can have equity, but they can also have debt. And the return that you require from each of them is different. But whether it is equity or debt, we both know very well whether it is an asset or whether it is debt, both of them are a claim to the cash flow. That's what they are. It's a claim to a cash flow, equity or debt, claim to cash flow. So you need to measure each of them, and then you need to calculate the weighted average, and then you need to find that and put that into the denominator. And after you've done all of that, you're still not done, because you need to calculate the cash flow of the company, if that makes any sense. So the cash flow is really hard to determine. Again, this price is determined on the future, right? It's what is the expected cash flow of the company. You're not paying, right? Musk didn't buy Twitter based on how much money Twitter is generating now. Musk bought Twitter based on how much money he expects Twitter to generate once he takes over. So that's really hard. That's really hard to do. And how do you estimate that? Well, you use a market multiplier. For example, you look at different companies operating in similar industries and you multiply by that. You also take into account, again, when you're calculating this cash flow, you have to take into account, well, how much debt does the company have? How much loan, how much real assets does it have? So it really gets complicated, really, really complicated. I have to emphasize that. It's not easy. The formulas look easy. If it was easy, everyone would be rich, right? It's actually hard. It's really hard. You are predicting the future using statistics. And there's also a lot to do with accounting, which I'm going to cover a bit later. Because a lot of these cash flow estimations and everything, they have to do with accounting a lot, right? Like you need to be able to read books. You need to, especially with the cash flow estimation part, a finance major will be really good at determining the return, right? But accounting majors are really good at determining the cash flow that you need to use to calculate the price of the asset. So you kind of have to be a jack of all trades, if that makes any sense. Just a side note, an accounting plus finance major is super valuable to the market. I cannot emphasize this enough. Accounting plus finance major, you are super valuable to the market, whether it is the Australian market, the USA market, any kind of market. Accounting plus finance, but you can't just be one type of guy, you have to be both. Now, this is what these big firms do, right? They are a bunch of firms with a bunch of analysts that do all the analysis necessary to do the M&As. Some of you might ask, well, how do they generate so much money? Well, if Musk buys Twitter for like billions of dollars, let's say the firm that does that, let's say, I'm not sure if it was JP Morgan or Goldman, but let's say there is a firm that takes that into account to do that M&A, that firm will make hundreds of millions of dollars in commission fees, right? This is how these finance institutions thrive, whether it is a hedge fund, whether it is an IB, whether it is a venture capital firm, they thrive on commission fees, right? That's the general idea so far. So we have learned that in your degree you will learn about investing, the basic principles of investing. You will learn about the different types of securities, and you will learn that there are institutions that combine these basic principles of investing and estimate the price of these different type of securities, right? But it doesn't end there, because that's essentially kind of learning the rules of the game. But how is it beneficial to you? Let's say you want to start your own company, you want to be a startup, right? That's just half of the game, not even. There's something that we call IPOs, SEOs, primary market, secondary market, venture capital firms, angel investors, poison pill and hostile takeovers. All of these are really important points that you need to learn. At the University of Melbourne, I am not promoting the University of Melbourne by any means. I'm not promoting any university specifically or in general. I'm just saying from my experience, since I studied at that university, I can say that this is what I have learned, right? But obviously, you're gonna learn the same in other unis as well. I'm pretty sure. You can learn this through YouTube videos as well, through a good course on YouTube. You don't necessarily have to. You don't necessarily have to go to uni to learn all of this. But yeah. So what is an IPO? An IPO is an initial public offering. And it's essentially when big companies go public. So let's say Musk owns a company called Tesla. When he started that company, it was a private company. Then he went to a bunch of investors. Actually, Musk went to an investment bank, and the investment bank then went to a bunch of investors and said, hey, we have this company called Tesla Electric Motors. This company is going to make you a lot of money in the future if you buy its stock. It's very profitable, or it will be very profitable. It's the new thing, right? Everyone will want to have it. You're going to be a millionaire if you invest. This is an IPO, when a company issues stock because it needs a lot of money. And some of you might ask, well, why did Elon Musk need a lot of money at the time? Isn't he a millionaire? Well, the thing with these big companies like motor companies, you need a lot of capital to operate these kind of businesses, because you need giga factories, you need equipment, you need to pay your staff, right? The amount of money required for your business to succeed in a short period of time, it's honestly unfathomable. So you need to have quite a bit of it, and that's where you go IPO. And then SEO is the same thing. Season equity offerings is after a company goes IPO, eventually it might want to offer more stock onto the market. But the problem with doing that is that if you offer more stock after your IPO, that's an indication that you're burning cash and you're not really profitable. So some companies don't like doing IPOs, don't like doing SEOs. So IPO is good
for a lot of money at the beginning. SEO, not so good, but it depends on the company. Uh, because it's also an indication of a new future big investment. Primary market versus secondary market. Primary market is the IB bank, again, the investment bank, issues stock to investors. The secondary market is essentially investors trading within each other. So let's say an analyst comes to me and says, "Hey, we have this new company called Tesla Electric Motors. Would you like to buy? Would you like to buy its stock?" I would say, "Sure, I'll buy it. I'll buy this much stock for this price." And then they're like, "Okay, cool." And then after I get that stock, it's mine and I have the right to do whatever I want with it. So now I can sell it to someone else. I can sell it to you guys. That's the secondary market. So the primary market is the company getting the money, right? The secondary market is investors trading within themselves. So primary market, company trades with investors. Secondary market, investors with investors. Uh, Now there are something called venture capital firms, angel investors. There's shark investors or loan sharks. Um, Now all of these has to do with funding your company. So venture capital and angel investors are the same thing. They come and they just throw a bunch of money at you because they think your business will be very profitable in exchange for equity into your business so they can make money back. So that's a different type of way of generating money. Usually, when a company starts, it usually goes for venture capital or angel investors. Then it goes on to IPOs and SEOs because um, that's how it works. Uh, it's very hard to go IPO unless you have an already big company, right? Now, there's the last dot point that I have included, and that has to do with again the fact that these companies that got founded by other people, they can get very big, and there's a lot of stock out there. So a company that is publicly listed is essentially for sale all the time, if that makes any sense. Someone is buying the stock, and as I told you before, if you buy the stock of a company, you have voting rights for that particular company, right? So someone, aka Elon Musk, who's very rich, or any other very rich person, can say, alright, so let's look at some companies like Twitter, and he thinks of buying stock, right? But when keep in mind you're buying voting rights as well. So when Musk bought Twitter stock, he was essentially buying the voting rights as well, right? He was buying power, if that makes any sense. He was becoming more powerful in the company because obviously voting rights means you have decision making power, which means uh, you're kind of a leader, if that makes any sense, in that particular company. And what can happen is that once a person passes a certain threshold uh, of acquiring shares, sadly, that's when they have full power of a particular company and then they can take over completely. That's what Musk did with Twitter. He gradually was buying more and more stock of Twitter up until he came to the point that Twitter could not actually oppose Musk, if that makes any sense. He became very powerful by buying stock gradually more stock. So that's the problem with being an IPO company. The original owners of the company, like Twitter, can actually lose their holdings of their own company because someone else who's wealthier can gradually take over everything, right? And that's what they call a hostile takeover. Whether you like it or not, you have to give up your position. Now, that's about finance. Finance is what you would refer to as the more interesting things about commerce. That's what people like about finance. The problem with finance is that it is very unpredictable. It's essentially you're learning the rules of the game made by people, and you're trying to play by those rules of the game, which are very much
uncertain, right? You learn the rules of the game that are set by some people, but the rules are always very. It's hard to play by those rules because, again, there's nothing straightforward about finance. But a lot of people go onto it because, again, you can make a bunch of money. So, I guess that's it. It's just people playing around. Okay, finance is essentially, in my opinion, and many of my professors, it's essentially playing around with money, right? You're kind of moving money around, but it's hard to do that, right? So yeah, it's a power play. Economics. Now, economics, I love economics. It's the rules, again, it's about the learn economics. The way I like to think about it is that economics sets the rules of the capital markets, and finance guys play around with those rules, right? But the thing is, in economics, you study economics is like data science, but especially if you study a master's or if you do a PhD in economics, you will essentially learn that you are doing data science. You're a data scientist, but for the markets. That's what an economist is. You're trying to predict the future again, but not only that. In economics, you're trying to understand the capital markets. You're trying to understand human behavior, and you're trying to use data in order to understand the current situation of the market and use that data to predict the future, right? Whereas in finance, you are using data from the future, which obviously you don't know, to predict the future, right? Which obviously you don't know, right? Or essentially you're using data from the future to determine what's the present value that you need to pay for the company. Whereas for economics, you look at the present state of the economy and you say, well, according to what we're doing right now, this will happen into the future, right? So economics is a bit more certain. It makes a bit more sense because you look at the present to then estimate the future. But in finance, you try and estimate the future in order to get the present value of a company back. So that's kind of hard to do. Now, economics is divided into basically two main streams, microeconomics and macroeconomics. Both of them are phenomenal. Again, economics is all about research. You are just a data scientist. You're a researcher at the end of the day, right? It's pretty cool. Now, microeconomics is a branch of economics that studies the behavior of individual consumers, individual firms, right? This is the key. Individual consumers and individual firms and industries and how they interact in specific markets. It focuses on how decisions made at the macroeconomic level, the individual level, affects the economy as a whole, right? So it's a micro view. You're looking at one firm. You're looking at one individual, right? In microeconomics, you look at whether the marginal benefit exceeds the marginal cost, and that's when you take a decision. It's a lot of common sense. So in microeconomics, the fundamental principle is that people make decisions based on their self-interest and respond to their incentives. The field also examines how these decisions are influenced by factors such as prices, income, and preferences, and how they interact to determine market outcomes such as supply and demand, market structure, and the distribution of goods and services. Microeconomics is used to study a variety of topics, including consumer behavior, market structure, market failure. Government policies is a really big one, such as taxes and subsidies, to name a few. So, with microeconomics and economics in general, we focus on the concept of welfare. We want to increase the welfare of the economy. And the last sentence here is the most accurate that I can possibly make about economics in general. The goal of economics or microeconomics is to help understand and explain economic behavior so that informed decisions can be made about how to allocate scarce resources efficiently and effectively. That's the idea behind economics. You learn the current behavior of the market in order to optimally allocate scarce resources so you can obtain the most out of it. Again, a lot of people think finance and economics are the same. They are not. They are very much different. But they rely on each other quite a bit. Economics is the allocation of scarce resources. Finance is, as the name suggests, about business and making money, right? Uh, yeah. Macroeconomics. Now, macroeconomics is a branch of economics that studies the behavior of the economy as a whole, rather than the behavior of individual consumers, firms, and industries. Now, what does that mean? It means that it focuses on large-scale economic factors such as gross domestic product, inflation, unemployment, and trade balances, and how these factors are affected by changes in government policies, global events, and other external factors. Now, macroeconomics is concerned with understanding how the overall economy functions, including how income is generated, how goods and services are produced and consumed, how prices are determined, etc. It examines essentially the role of government policies, and what it tries to do, it tries to predict again these growth lines that you see here. It tries to explain the past and it tries to predict the future. That's what economics does. Now, it's really important to understand economics, especially macro, because it focuses on GDP and GDP per capita. That's the thing that helps us determine whether the government is doing a good job or whether the government is doing a bad job. Now, obviously, if the job isn't the best, right, if they're not really efficient, we can use GDP as a measure of it. Obviously, some governments, I'm not saying they do, but some might have the idea to play around with these figures and lie. Some may not. I'm just saying, uh, it can happen, right? And the reason I'm emphasizing that is because, again, this is the only way, or one of the only ways, that we can properly measure if government policies are effective, right? I really want to make that clear. It's very distinct from finance. Finance has a huge focus on investing and making money. Economics has a huge focus on understanding the current capital market and understanding whether resources have been allocated effectively and whether there is an opportunity to do a better job. That's what economics is all about. It says, hey, how many people do we have working? Hey, what's our GDP? Can we increase our GDP? How do we increase our GDP? Which is the next slide. This is how we increase your GDP, right? So why do we want to increase our GDP? Why? Well, that determines welfare. That determines how much money people have. How are prices determined to begin with, right? So everything that you see around you, every economic, everything that you see around you, any transaction, any trade can be explained by economics. It explains the present, right? And it tries to understand how to allocate the resources more effectively, so you can increase the overall wealth of society and you can make better decisions. Finance is more individual. It's primarily how do I make more money, right? How to value a company properly, but why do you want to value that company properly? Well, because I want to make a lot of money, right? That's kind of the idea behind it. You don't go into investing with the idea of being generous. You want cash from it. Now, back to economics. What's GDP all about? Well, GDP is essentially the sum of personal and public consumption plus government expenditure plus public and private investment plus net exports. Net exports are exports minus imports. That will give you the GDP. GDP per capita is something that you learn once you divide by the total population, right? Now, obviously, you're going to learn about other things in macroeconomics. You will learn about inflation. You will learn about the CPI, Consumer Price Index, which is essentially a price index based on a basket of goods. These are things that you will learn in macroeconomics. not in macro. In microeconomics, you will learn about how prices are set, how can a firm maximize its profit, right? Marginal benefit over marginal cost. How many units should it produce, right? Whereas economics is, well, how much do we need to increase our net exports? Macroeconomics is, well, how much do we need to increase our net exports by to maximize our GDP? But the common thing between micro and macro is again the effective allocation of resources in order for future benefit. And it's primarily driven by data. Economics is primarily driven by current data in the market. Now, this is my emphasis on why it's data. Economics, just like finance, it's actually a bunch of math. Especially if you study at Melbourne Uni, again, it's a lot of math. I think Monash has less math, but it's a lot of math. Melbourne University is rigorous with its economics degree, right? So what you will learn is about the Cobb-Douglas production function. You'll learn about maximizing output via the amount of labor and capital that is available in the economy and a factor that we call A. That A factor can be technology, right? Now obviously the alpha and the beta that you see, they are exponents of labor and capital, right? They are variables which are raised to this particular exponent. But why? Well, they determine, the alpha and the beta are essentially determine what share of output is dedicated to each, or yeah, what share of output are each of the components, each of the variables responsible for. Whereas alpha is something that can essentially maximize the output. Some of you might be a bit confused by the diagram on the right. So when we talk about economics, it's not everything 2D. It can be very much 3D. It's a three-dimensional kind of thing, if that makes any sense. You will have to learn about vector calculus. Economics becomes difficult. It's vector calculus, right? It's all about math. It's actually a lot of calculus. So there is something that you will learn at uni, which is economics and econometrics. Both of them are, econometrics is data science, basically, using data. It's a subject that teaches you how to use data, whereas other economic subjects is about learning the general rules, right? So econometrics is quite a lot of math. It's statistics of economics, and other economic subjects you're gonna learn calculus and vector calculus to understand the market, right? So if you learn about microeconomics, you're gonna learn about vector calculus. You're gonna use vector calculus to understand the market, and then you're gonna use econometrics, which is statistics, in order to explain what's happening. So if you're thinking, wait, economics is all about math, that's not what it was in high school. Well, to be honest, it has always been math. Right? I was personally surprised once I went onto the degree. I was like, damn, there's quite a bit of math here. Well, yeah. It apparently it always has been a lot of math, right? That's, I think, the best application for math, economics and finance. Now, obviously, we can go through a bit of accounting before we have a 10-minute break because I'm getting tired. And we can run through a Q&A. But accounting is essentially the process of recording, classifying, is another major that is provided by the commerce degree. Accounting is essentially a process of recording everything that's happening. It's not as much about analysis, it's about recording. But don't get me wrong, careers in accounting can be very, 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 very valuable. Very valuable. They can be very, very, very profitable. You cannot, honestly, yeah, accounting is pretty much up there when it comes to wanting career progression because, well, yeah, that's what you want your CEOs to be able to do. You want them to be able to read books. That's the thing with it, right? Accounting is about learning how to. Accounting is learning how to record data, right? Economics and finance is about analyzing the data. So you might think that analyzing is a more valuable skill than recording data. The problem is that you need to be able to do both. In fact, accountants are considered more valuable in some instances, especially for private businesses, because you cannot analyze something that you cannot read. So by default, accountants end up being very valuable to the economy because they are not only the ones that record the data or decide the information that needs to be put down, but they are also the ones that are able to read it. And you cannot analyze information without reading it. So if information is knowledge, accountants are the ones that record that knowledge and are able to decrypt it, right? Whereas financial and economic analysts analyze it. Now, that's all there is to it, right? Accounting has three main primary functions: recording transactions, classifying transactions, and summarizing transactions. Also, accounting, unlike economics and finance, is actually very much concrete, right? Your it's very the books are there. It's very much real work that you're doing, right? I'm not saying economists and financial analysts don't do real work. They do, but accountants will always be in more demand because every business has the need for an accountant. It's a very safe job. It involves documenting all financial transactions in a systematic manner to ensure that the information is accurate and up to date. It involves classifying transactions. This involves grouping similar transactions and presenting them in a standardized format, such as an income statement or a balance sheet. And summarizing transactions, which involves presenting the financial information in a condensed form, such as financial statements that provide an overview of the organization's financial performance and position. So again, accounting provides important information to stakeholders by breaking down the financial data into manageable parts and presenting it in clear and organized manner. It also provides the basis for informed decision making and financial management. Now, there are different branches of accounting, including financial accounting, management accounting, and tax accounting. All serve different purposes and provide different types of information, but all of them are very valuable, especially financial accounting. Now, some big organizations can actually play around with the numbers, and that's what makes a good accountant very valuable. If you look at top companies, their good accountants are actually paid pretty handsomely as well. Now, in accounting, you will learn about something called cost volume profit analysis, which is essentially a management accounting tool used to determine how changes in cost and volume affect the company's profit. CVP analysis is also known as break-even analysis and is used to determine the level of sales needed to cover all costs and generate a profit. CVP analysis involves looking at the relationship between a company's costs and variable costs, fixed costs and variable costs, the volume of products and services sold, and the resulting profit. By analyzing this relationship, managers can obviously make decisions about pricing, production, and other aspects of their business that affect profit. The key components of CVP are fixed costs, costs that do not change regardless of the volume of production, such as rent and salaries, variable costs that change as the volume of production changes, such as materials and labor, sale price, the price at which a company sells its products and services, and volume, which is the number of products or services sold. Accounting or CVP analysis is what you see here. It's basically saying that as you increase the volume of your sales, your fixed costs will reduce per sale, your variable cost will linearly increase with fixed costs because with uh, there is going to be a linear relationship between your variable cost and sales because that's the cost per unit of product, so obviously it's variable. But rent per unit of product will decrease, and therefore total revenue will increase with the more sales, and it will increase by quite a bit, right? So total cost is going to be a sum of fixed and variable cost that you see on the side here, right? It's a sum of these two. That's what it is about. That's total cost. So total cost is this part here, and it's going to give you this green line. The problem is total revenue obviously will be determined by sales. So once you reach a certain number of points of sales, you're going to reach something called the break-even point, where revenue minus cost is going to be equal to zero, and that's the number of units that you need to sell in order to break even, in order to uh, not go under, right? Not to be in a loss. But if you make above that break-even point, you're basically making profit because profit is revenue minus cost. Now, I think I've talked a lot for now, for like an hour and 15 minutes. Do you guys have any questions to ask me? Okay, good question. Does economics have large portions of math, or can you focus on more theoretical concepts? Okay, it depends on the subjects that you choose. That's the thing. You can choose very mathematical subjects, but you can also choose the very theoretical side. Economics is really broad. I only covered micro and macroeconomics, but there's also something really cool called experimental economics, right? So, yeah, it's very much. It depends. Okay, you can choose whether it's a lot of math or not. That's my answer. It can be a lot of math, but it cannot. Up to you. What do you think is the hardest part of studying commerce? The math. No, not the math. It's the hardest part about commerce is the vocabulary. There's a lot of jargon in commerce, especially as an international student. That was the hard part for me. But look, there are a lot of international students studying it, and a lot of them are doing very well. Are there pathways in finance that avoid the high caliber math? Uh, yeah, I would say there are, but there are definitely. Look, the math is not that hard. Math in finance is significantly easier than math in economics. If you choose mathematical economics, right? If you choose to go onto econometrics, that's significantly harder than the stuff that you do in finance. But it's not high caliber math finance overall. It's it's only high caliber if you want to go with quant trading. Other things are very normal, very easy. I would say not easy, but normal. You can handle it with a little bit of work. It's nothing too complicated. Okay, I'm gonna let you guys ask questions while we can take a small break because I'm losing my voice. It's getting a bit long. We have another hour to go. That's the thing. I have actually a friend that's doing a PhD, and he said uh his maths is not the best. It's a PhD in finance. Depends. It depends on like the area of finance that you focus on. He was doing something very interesting. He was studying the behavior of rats or something like that. It's interesting. You can do a lot of stuff. Personal study tips for this course. Ah, I would say go on Reddit. uh, that's where my personal math concepts. Okay, so what are your personal study tips for this course? I would say definitely use. I know the new brand Uni Notes. Our company is providing notes, but you can also go to Reddit to find some information. I would say personal study tips. Study wise, anything would be above anything. I would say keep up with your assignments. Let's say you go to the University of Melbourne, right? Number one rule is don't fall behind on your assignments. That's the number one rule. If you can keep up with the assignments and the lectures that you learned that week, you're basically gonna do well. That's the thing, right? All things held constant, you're gonna do well if you keep up with your assignments. But the problem is, it's easier said than done. So I would say time management is really important. So try and use a calendar. I personally prefer Google Calendar over Outlook. So try and use Google Calendar and try and set very strict deadlines for your assignments. At least do them immediately as they come out, if that makes any sense. That's my pro study tip. Do your assignments immediately as they come out, because it's really hard to keep up. If once you fall behind in assignments, even my manager would agree with this. It's very hard to catch up again. What are some of the other math concepts that are involved in commerce? So I didn't really mention them that much. I would say they were math concepts. I would say vector calculus and stats are the main things that you need to learn about economics and finance and actuarial studies. Anything else, it's not fun. It doesn't involve math, right? But yes, statistics is a big one. I would say learn about probability theory. That goes for both finance and economics, and learn about normal distributions, skewed distributions. Learn about regression, and that's it. It's not too difficult, but it can get hard, right? It depends on how much depth you learn them. What do you think is the best major to do nowadays? It really depends. You see, one of my friends, their parents were investment bankers, like they were partner level, right? So they recommend accounting, obviously, because as I said, accounting is really important because it's the ability to read the recorded information, right? Economists and finance guys, they analyze information, but you cannot analyze something that you cannot read well, right? So if you do an accounting and finance major, that's you're golden, if that makes any sense, because you're showing that, hey, I can record and read information, and at the same time I can also analyze it, right? So you kind of need both of them. But what I've seen, and I'm gonna note this because I've seen a lot of kids that come from very affluent families, from very rich backgrounds, and their parents own businesses and stuff, and even their parents are like investment bankers. What's interesting, what I've noticed is they recommend management actually, and I also did an internship, and apparently a management degree is useful. I did not think of it too much, but it can be useful. So I would not think of it. Yeah, it depends. Yeah, so I would say accounting, finance, economics, you're okay if you have a combination of those, right? As long as you combine two, you're fine. I would say in commerce, that's the beauty of commerce. As long as you combine two majors, you're fine. The best possible is actuarial studies, right? The very best possible. But it can the best possible degree to study is actuarial studies, but it's hard. That's the thing. So if you study any other degree, my opinion would be do a combination of hard plus easy. So accounting, finance, and economics are hard, but marketing management can be easy, right? So try and combine those two, and you're kind of golden. You can do finance and marketing, or you can do accounting and management, right? I personally did economics and finance, so it can get a bit rough for that matter. But that's just because I personally wanted to do multiple pathways and I like economics, right? If you want to learn if you want more job opportunities, I would say economics can be a good choice because if you study finance, it does not necessarily mean you can work as an economist. But if you study economics, you can work as an economist and a financial analyst. So that's the thing. It depends if you want more jobs. And if you want PR, if you want to get PR, if you're an international student like I am, I would say commerce in itself, it's very saturated. But I know accounting is a really big one because the big four companies hire accountants a lot. I hope that answers. That's a really good question. Why Google Calendar over Outlook? Now, I think even the moderator and anyone listening, Google Calendar is really simple to use and it's really intuitive. Um, I just like the user interface of Google Calendar. That's all there is to it. Outlook to me is a bit more, uh, it's more cluttered. Yeah, that's the word. It's very much cluttered. There's a lot of stuff that you don't need for a day-to-day kind of thing. Productivity, in order to maximize your productivity, you need to be efficient. You can't be efficient if the product is not simple to use, right? Sometimes simple is best. That's what I'm trying to say. But you can use Outlook. I know some of you are from China, and I think a friend told me that in China you're not allowed to use. You can't use Google Calendar. You can correct me on that, but I'm pretty sure they have their own software. I'm doing a double degree with IT at Monash. What do you reckon is a good major combination with cybersecurity, which is my other major for the IT degree? Ah, yeah, cyber, that's a good one. I would say with cyber, you'd be surprised by my answer. Obviously, that's a decision that you have to make, but from my experience, management, if you can. So depends. Vet, do you want to have your own company in the future, or do you want to work for a big company? So if you want to climb up the ladder, vet, of a big company, you'd be surprised that the management course will be very beneficial, right? A management major, or you can do a management. I would say the maybe I don't know. Can you do a double degree at Monash with IT and management or IT and marketing? Because if you do that, that's epic, in my opinion. And I've done an internship as a reporting analyst for a big recruitment firm and one of the biggest in Australia, if not the world. And yeah, that seems to be a recurring theme. For guys in IT, having a management major, it's super beneficial. It can accelerate your career ladder, right? Because IT is teaching you the hardcore skills, if that makes any sense. But you also need to develop your soft skills, and management can help you with that, if that makes any sense. Any other questions? You can ask about anything like that you're asking from Monash, even though I'm a Melbourne student. You can ask anything. FYI, I also did a science degree at Melbourne, but that changed. I did commerce afterwards. You can ask me about that. You can ask me about anything. Yeah. Also, keep in mind a lot of the commerce things you don't really need to study it, but as a degree you can learn it online. But that's the thing with everything, right? Even with IT, you can you can learn it. I've learned Python online by myself, so I think study what you enjoy most, I would say, and then once you try Once you find out what you really like, then you can learn more and excel in that field. What commerce major would you recommend for someone doing a double degree with engineering? Management. Again, management. So you don't. Okay, so are you Australian? The ones who are asking for the double degree. The thing is, the reason I'm recommending management is because you don't want to go back to uni to study again because that's gonna. If you think about the future, right? A company will ask you to. Obviously, you need to have a degree, right? And then they will say, "Oh, do an MBA or do like a management course so you can be promoted to a manager." It's a lot of fluff for some companies, right? There's some fluff associated with it. That's how they operate. So, in order to not have to be overloaded, try and um, so in order for you not to go into more debt or waste more time after you finish your double degree, I think that's the best way for career progression because if you have hardcore skills, I would say try and develop your soft skills. But like if you're doing engineering, do you really want to do accounting? I would say that's the second best. Accounting can be very boring at times, right? It can be very draining. But wow, Monash offers a double degree of engineering and commerce. What the hell? That's so epic. That's epic. Does it really? That's epic. I should have gone to Monash. Really? Commerce and engineering? That's insane. That's mad. You're basically guaranteed a job if you have engineering and commerce on your resume. What the hell? That's epic. Law, okay. Uh, if you're doing law, accounting. If you're doing law, I would say accounting. You can go and become a commercial lawyer and make. I have a friend who's a commercial lawyer. He's on 250,000 a year, and he did both law and accounting. So yeah, if you want the big bucks, I would say. Really, it offers many double degrees. That's insane. That's insane. So if you, because the thing with commerce as a standalone, it's all right. But yeah, personally, for example, I was thinking of a lot of students you should know at Melbourne Uni. At least my friends, they went on to pursue a they went on to pursue a major in after they did their commerce undergraduate. The tactic at Melbourne Uni, the strategy is once you do a commerce undergraduate, you do a master's in IT, right? Or then you do law. That's why I recommended you since you're doing a double degree. I know at Melbourne Uni they do like an undergraduate in accounting and then they do a law degree on top, right? Or they do like an undergraduate in management or economics and finance, and then they do an IT degree on top, like an IT master's, if that makes any sense. So it's like undergraduate plus the master's. But if it's a double degree, that's nuts. That's insane. Dude, that's insane. I didn't know that. Why? Though I have to say for the Monash people, if you want to study at Monash, let's be honest, the website is a bit confusing. Like Melbourne has a better website. For me, it was so hard to navigate through that. It's hard to find like the subjects and stuff. But I'm not saying anything bad about Monash. Both Monash and Melbourne are really good. Look, the only difference is that at Melbourne you just have to be a bit. It's just a bit more expensive. That's all. If you're doing both undergraduate and masters, even as a domestic student, you have to pay full fee for some master degrees. It can be very expensive. Like I have a friend who's paying for his masters $80,000, right? That's enough money to put down to buy a house. So but a lot of them are very wealthy. So if you want to be around wealthy people, I think Melbourne is a pretty good choice. Cool. Any other questions? But yeah, I hope I answered that. So yeah, finance and IT, or accounting or management and IT, and if you're doing law, definitely accounting, and you're basically set for life. I'm joking. It depends on what you want to do. Try and think about the job that you want to do afterwards. Alright, our 10-minute break is over. Okay, unrelated question, but as an international student, why did you pick to study in Australia and in particular Melbourne Uni? Good question. I'm gonna give you the same answer as every single one of my friends. I got sold onto the prestige of Melbourne Uni because it says no. I was very naive at the beginning. It's just the prestige side of things. My parents, uh, I am from Europe and I'm from Eastern Europe, as you can tell from my accent. And in Eastern Europe, is all about not losing face, if that makes any sense. Prestige is really important, status and prestige, right? So yeah, that's why I was kind of forced, low key, to go to Melbourne Uni because I came to Australia, so might as well Melbourne Uni. Why did I choose Australia is a good question. My sister was already here, so that's why I chose Australia. So Melbourne Uni then was just like the second. It was the most. I didn't really have a choice when it came to uni. Uh, yeah. What do you recommend to do for someone who has failed accounting as a unit? I feel with you so much because my accounting. I've done one accounting subject. I didn't excel in it either. I didn't fail, but I didn't excel in it. I would say don't try and pursue a degree in accounting then, because accounting can get draining. Like it can be very draining. And if you're not amazing at it, you're probably gonna get stuck doing tax accounting or something like that. There's not much money into it, right? As a job, studying. You're better off, I would say, studying marketing, right? Marketing is a really hot major at the moment. I would say all commerce majors are really hot at the moment. I know STEM people, I don't know, I think STEM is overrated, I'm not gonna lie. Commerce gets a lot of jobs are in the commerce field. It's all about business nowadays. So if you're not good with accounting and math, or if you just don't like accounting and the vocabulary associated with it, look into marketing. I have a lot of friends that shifted to marketing. I personally just didn't like accounting because it was boring, so I did finance and economics. So yeah, so I got peer pressured into I got pressured by my family to going into Melbourne Uni, and I got peer pressured to do commerce because Melbourne Uni is the most prestigious when it comes to commerce, especially economics. So yeah, I kind of explained myself, I guess. I think I gave good advice, but yeah, accounting. And guys, do not pursue any degree. I should emphasize this. Do not pursue any degree that you do not enjoy, because it's gonna be really painful. You can't work in a field in which you're gonna suffer, if that makes any sense. You have to. Companies want to hire the best. If you don't like what you're studying, then probably you won't be the best at it. Cool. So we went through some break time, 10 minutes. Um, that was a good conversation with you guys. Keep posting questions on the Q&A. Don't be afraid. I will still answer at the end. I will still leave like 10 minutes at the end, 5 minutes. So yeah, just keep asking questions. Should be alright. I can answer. So, guys, uni notes. We provide subject reviews as well. Please, okay, so we provide subject reviews and we also have notes. You can choose to upload notes if you wish, but also have a look at our website and please go onto the subject review section and try and rate subjects, try and give your thoughts about it. I think it's really important for us as a community of students to engage and help each other, and this is the best way to do it because we thrive by helping each other, and UniNotes is the platform that allows that to happen. and obviously the free notes section. I think we covered it. Now we're running on time, so I should better be going on talking about actuary and stuff. But yes, we also have a lot of discussions. For example, what are your tips for first year? Any advice for making friends? Third round offers, uh, uni engineering, general uni tips. It's not about any specific uni. You can talk about other unis. You can ask for help which uni degree to choose. You can ask for help which major to choose. It's really up to you, and I would highly recommend just just going onto the discussion board and yeah, having a go at it and trying to benefit from it. Let's ask you guys some questions I forgot. How did I start you count? Alright, do I work? Yes, I work. This is my job, right? Um, I get paid to do this. Okay, all of these are amazing questions. I will answer them. I will answer all of them. Keep asking questions because I want them to build up a bit before I want them to build up a bit before I answer all of them. But yes, I can answer your questions, guys. I can answer internship questions. I've done an internship. Despite being an international student, I managed to get an internship. I can give you tips about that as well because it's really hard for international students. I have to mention that. Yeah, cool. I want to see which area of commerce are most of you interested in. Accounting. Damn. Management. I know there's more than two of you there. So economics. Cool. All right. Eight responses. Economics and management. Fair. That's a good one. All right. And another 2 minutes or 3 minutes. Why commerce? Just write a word. This is called a word cloud kind of thing. Let's present this. Why commerce? So why are you attending this? Why are you attending this lecture? Basically, why are you interested in commerce? Money. Management skills, fair. Money, same. That's why I chose commerce as well. I know there's eight of you, so you're just interested, fair. It's easy. Prospect, fair. Easy was part of what I thought as well when I started studying commerce. I thought, hey, it's easy. It's easy at Monash. I would caution against that mentality at Melbourne Uni. It's not easy at Melbourne Uni, especially if you study any of the hard majors. You're very unlikely to succeed. It's gonna take more time. But at Monash, I know it's quite easy, so it's a good strategy to choose commerce. And yeah, the employability can be the employability can be actually good. Cool. Let's close this. But I would say money should be the primary reason if I were you guys. Eh, So the event code is hashtag for 10922 if you're interested in asking questions. For the Q&A, I will also present the Q&A, but yeah. Keep asking questions. Those four I really want to answer at the end. Yeah. So let's keep going. Let's talk about actuarial studies. Actuarial studies is a really good one, but I would say if you're studying actuarial, you better be focused on it. Actuarial studies is a field that deals with the financial and mathematical analysis of uncertain future events, particularly those related to insurance and pension companies. So basically, if you think of any insurance company, such as Medibank, Bupa, any big insurance firm, whether it is health or anything, they need an actuary, right? They use basically mathematical models and statistical techniques to assess and manage risk and to design and evaluate financial products and systems. Just a heads up, yeah, this this major at Melbourne Uni, it's very plain and boring and hard, but it pays better than IT degrees, right? I'm gonna put that out there. Job stability is phenomenal, pay is phenomenal. It's pretty good. The problem is they only hire the people that actually understand what they're doing, and it's really hard to understand what you're doing as an actuary, right? And the number of jobs available aren't really that many, I would say. But if you get them, you're basically set. Especially if it's a big insurance firm, like, oh my god. I have friends in that aspect, they're pretty chill. Now, they're chilling. And most graduate salaries are like $60,000, $65,000. If you look at an actuary grad salary, it's a bit over 100K. At least my friends that did actuary, they're earning over 100K as a grad. So yeah, uh, if you know your stuff, you're gonna do very well. But it's not just actuary, right? Even finance, if you know your stuff, you can do very well in finance. With a grad salary over 100K easy, especially high finance. Finance has the highest paying jobs, has the highest, actually, finance has the highest salary variation. You can have a very low pay, but you can have an also unfathomably large high pay, right? So it depends. So some of the listed below, you will find some of the important topics in actuarial studies, such as probability and statistics. So understanding probability theory and statistical methods is fundamental to actuarial science. They use these tools to model and analyze future events. Mathematical models, obviously, to predict the likelihood of future events, such as occurrence of a particular claim in an insurance policy. Financial mathematics. Actuaries use financial mathematics, and not the easy type, the hard type, to determine the present future value of future payments, such as annuities, pensions, and insurance benefits. Risk management. Actuaries help companies manage risk by identifying, measuring, and controlling potential losses. Life and health insurance. Actuaries analyze the risk of death and disability and design insurance products to manage that risk. Keep in mind, actuarial analysis or actuarial studies. The major is so hard at Melbourne Uni. Half of the people, like half of the cohort, bails out after first year. So even though it sounds simple, it's actually not. Right? It's very straightforward what they do. They predict the future, but yeah, it's very hard. The math side of it, it's really hard. So if you are not mathematically oriented, I would highly caution against actuarial studies. Uh, Property and casualty insurance, pension and retirement benefits, investment and financial products. Actuaries design and evaluate investment and financial products such as mutual funds and securities and advise clients on investment strategies. As you can tell, super valuable major, right? If not, it's one of the highest in demand skills out there, if you're good at it. And then you also have regulation and compliance. Actuaries ensure that insurance companies and pension plans comply with regulations and standards set by the government, agencies, and professional organizations. Keep in mind the job, the field. Okay, so keep in mind that jobs associated with actuarial studies um, are also a bit boring, right? So, as I said, don't just choose a job for the money. Also, keep in mind if it's boring or not. Because if it is, then probably you won't be able to last long doing it, right? Now, these are some of the core topics studied in actuarial science, and the curriculum for an actuarial science program will often cover all of these topics in depth. Actuaries are highly skilled professionals who apply their mathematical and financial expertise to help organizations make informed decisions in the face of uncertainty. To work as an actuary in Australia, you need a degree in the field. You also need to complete a training program set by the Actuaries Institute of Australia. You need to complete a Bachelor of Actuarial Studies or Bachelor of Commerce, majoring in Actuarial Studies, at an accredited university. And there's not that many out there. That's the problem. Actuarial Studies is probably one of the hardest majors out there. I'm emphasizing it again. In fact, it might be the hardest major, even more than a STEM degree. Becoming qualified is no easy task. Just to emphasize it, not even more than a STEM degree. It's like it's definitely harder than a STEM degree to go through it, right? Because it's hard math, hard vocabulary. It's really hard concepts, right? And the workload is insane. So good luck with actuarial studies if you're trying to pursue it. But if you're confident in yourself, I'm not trying to say don't study actuary. Study it if you're confident in it. But yeah, just keep in mind the probability, unless you're amazing at it, the probability of you getting that highly paid job drastically falls, right? If you are amazing at it, then you're gonna have a good job. But if you're not amazing at it, then you're probably not gonna get that job, right? There are very few jobs, all of them pay very well, they just hire the best. That's the problem. It's very much like IB, like investment banking. Now let's cover a bit of marketing. Marketing is the fun stuff of thing. It's the fun stuff. So marketing students get bashed quite frequently about not doing anything. But at the end of the day, if you look at real life, uh, besides what naive students think, marketing is really important. It's a broad field that encompasses many different aspects of promoting and selling products or services. And at the end of the day, it's all about sales. So business only survives when there are sales. If there are no sales, then what's the point, right? So marketing is really important. If you study it, it's quite beneficial. There's a lot of you can do also. You can learn a lot of topics. Some of the important ones are consumer behavior, where it goes into understanding how consumers make purchasing decisions, which is fundamental for marketing. This includes research and analysis of consumer attitudes, motivations, and buying habits. You can do market research. Marketing research involves gathering and analyzing data on consumers, competitors, and the market to inform marketing decisions. You can focus on product development. Marketing includes the development of new products and the improvement of existing products to meet consumer needs. Um, you can learn about pricing strategy, which involves determining the best price for a product or service, considering factors such as production cost, competitive price, and consumer demand. Uh, you can learn about promotion. Marketing promotion involves creating and implementing campaigns to communicate the benefits of a product or service to potential customers. These can include advertising, sales promotions, public relations, and personal selling. Keep in mind, even though the graph that I've put here looks cool and like you're using math in marketing, you're not. It's the most non-math major you can do in commerce. It's very easy, I promise, super easy. Yeah, it's if you're looking to do commerce, to do something easy, choose marketing or management. It will reduce your workload by a ton. So in marketing, you're going to learn about distribution, brand management, digital marketing, and customer relationship management. So distribution basically involves the distribution of products or services, including the selection of channels such as retail stores or e-commerce websites, and the management of the supply chain logistics. You learn about brand management, which involves developing and maintaining a company's brand, image, and reputation, including the creation of logos, taglines, and brand guidelines. Digital marketing also involves the use of digital channels such as search engines, social media, email to reach and engage with consumers. The third dot point, it's the third, but it's actually the first in terms of importance. Most of my friends who have majored in marketing and are working for a firm, the social media aspect is huge nowadays. It's where most of the focus is located with marketing. And the fourth, customer relationship management also is important because it's about sales, right? Now, these are just some of the important topics in marketing, and the curriculum for a marketing program will often cover all of these topics. Marketing is a dynamic and constantly evolving field, so professionals do need to stay up to date with the latest trends and techniques to be successful. For example, what does that mean? That means that while social media evolves, our strategies can change. It doesn't necessarily always have to be the same. Depends platform change. Uh, Platforms do change. For example, before they used to teach you at RMIT, I think, how to use Snapchat for marketing, but then obviously Snap is not used as much anymore. So it's kind of a hit or miss with marketing because what you learn can be outdated very quickly, given that the strategies used for marketing are always evolving. Now let's talk about management. I actually have a have a funny meaning about management. Um, With management, you have to learn that it is the process of planning, organizing, directing, and controlling the work of an organization to achieve its goals and objectives. Below, you will see some of the most important topics in management, for example, strategic management, uh, which involves the formulation and implementation of the major goals and initial initiatives taken by the company's top management on behalf of owners, based on consideration of resources and an assessment of the internal and external environments in which the organization competes. Organizational behavior. Organizational behavior involves the study of human behavior in organizations, including topics such as motivation, leadership, communication, and teamwork. So that's what we call OB. There's a subject called OB that you will study in uni. And there's also human resource management. Human resource management involves the aspiration, development, motivation, and management of a company's employee. Now, you can learn about operations management, which involves the planning, coordination, and control of activities involved in the production of goods and services. You can learn about project management, which involves the planning, coordination, and control of specific temporary effort with a clear start and end date. You can learn about financial management, which involves the planning, implementation, and monitoring of a company's resources. There's also marketing management, supply chain management, and information technology management. So it's all about planning and coordination and development. Your your degree will cover this in more detail. What I'm saying right now is just a general overview. Keep in mind, even though it sounds a bit too generic, it probably is not as invaluable as it may sound, right? So, what I'm trying to say is the whatever the degrees that you're studying, you can make the best out of it yourself, right? A management degree can be valuable if you pair it with something else, right? So it's more about the soft skills, the management degree. But if you're learning something that's more on the hard skill kind of thing, you're gonna be alright. Now, just a heads up about accreditation in commerce field. You'll hear about CFAs versus CPAs versus CAs. So chartered accountant, chartered public accountant, or chartered financial analyst. So these are institutes for which you need to sit an exam. Some exams are 4 parts, some exams are 3 parts. They are hard exams. In order to sit those exams, you do need to have an undergraduate degree. So even if you've done an IT major, you can actually do the CFA or the CPA or the CA. I don't know the exact underlying details or the requirements to sit those exams, but most students, once they finish, they don't really know which one to go with, or even if they should go with any of them. Those are expensive programs to qualify in. I should make that clear. It's actually very expensive to do any of those, but it can open job opportunities quite a bit, right? Like having a CPA will definitely make it easy for you to find a job, for sure. Now I'm gonna go and give you guys tips about uni life. We're almost at the end. But let's go through some of your questions. So, what major would you recommend if you plan to start your own business? I would say finance. Uh, it does teach you a lot about business, to be honest. There's also something called a Master of Entrepreneurship at Melbourne Uni. I don't know how useful that will be, but I would say finance for sure because it teaches you how the capital markets work and how you can raise capital. So it gives you an overview of how big businesses work, and from there on, you can extrapolate downwards. So a major in finance is the kind of thing that will that's the skills that a major in finance primarily supplies you with, right? That knowledge is you can be used for you to understand business and therefore start your own business, right? Finance and economics, but economics primarily is more of an employee kind of mindset. You go and work for the government or you work for a firm and you use data to analyze whatever they give you. But finance, people that study finance have much more of an entrepreneurial mindset. Or if you study finance, at the end of the day, you learn about business and entrepreneurship, right? That's the thing. Once you gain that knowledge, you do want to go down that path. Yes, you can access the recording for this. How did you study? How did you study accounting? Okay, accounting is also good if you want your own business because you can write your books at the beginning, and yeah, you can read books, I guess, which is good. Uh, but for accounting, if you start your own business, I would say I would actually caution against it. Just get the certified accountant. They know what they're doing more than you would ever. Um, how did you study accounting? How did I study accounting? Um, Even I don't know. When I was going through the subject, it was a little bit painful. It's draining to say the least. I was trying to. I don't know how to answer that question in a positive way. uh, how did I study accounting? Well, again, I tried my best to keep up with the tuts, and I tried my best to keep up with the assignments. It's not that hard, it's pretty straightforward. Depends on the lecturer that you have. I would say, yeah, my case was not the best case. Of yeah, how the subject will be managed to do well, and a lot of students hated that particular subject just because of that reason, I guess. Um, in my case. But yes, keep up with assignments. That's all. Oh, and learn how to use Excel. So if you're going to commerce, you do need to know how to use Excel. That's the thing. Would you say international business is a lucrative field? It's a very lucrative field, and I think it will become even more lucrative in the future. That's my personal opinion. But I haven't done the necessary research for it. Are you working right now? How do you balance your time? Again, I am working and I am studying at the same time. How do I balance my time? I would say I use Google Calendar. I try and like have a set time for studying, and then I have a set time because I know when my shift is, right? So I have my shifts, and then I have a set time for studying, and then I try because I live by myself, right? So in my case, you do need to dedicate some time to do household chores. So I leave that primarily for the weekend, and I also do meal prep in the weekend afternoon. So yeah, that's how I do it. I guess time management. I think you do need a software for to manage your time well. For me, Google Calendar works well, or you can just have like you can use notes or on your phone, or you can use an actual piece of paper and jot it down. I would say have a calendar, use a calendar. Do you think so? Oh, and I do remember when it comes to time management, one of my friends, she had the best time management skills. She would spend the entire week studying and working, and then she would leave the weekends off to spend time with friends. That's another way to do it, but that's if you're living, I think, with parents. That's manageable, but if you're living by yourself, I think uh, you're working and studying and doing household chores. It's quite a bit. Yeah, the weekend you can still manage with that, I guess. You can leave one day on the weekend for all your household chores. When what I mean by household chores, I mean cooking. It takes a bit of time. You can meal prep. I meal prep. Yeah. Do you think some majors or areas of commerce will be phased out by AI? Good question. I'm not sure. To be honest, that's the thing that put me off from majoring in accounting, to be honest, because accounting is just a bunch of rules, right? So audit is kind of a tricky thing because that's what AI is. You give it a set of rules, and it will follow those rules. So I am not sure how to answer that question. Obviously, uh, still doing accounting would be beneficial, right? You can't just depend on the computer to do everything. But hey, what do I know, right? So if you look at AI, AI can play chess as well. So if it can play chess, it can follow. If it can follow those algorithms, it can definitely do accounting as well. So accounting maybe, finance unlikely. The thing with finance is because I mean there is the company called BlackRock that uses I think, but oof, you still need people. That's the thing. Economics, you still need people. Behavioral analysis, yeah, it's hard to answer that question. I think that's a hard question to answer for me because, yeah, I think it's a bias against myself, right? Where and when did you do your internship, brother? Um, so I did my internship in my final semester. It was facilitated by my university. But yeah, I don't think I should mention the name of the company, but it was a simple analyst position. It was in Melbourne. So look at the university you're at, especially if you're an international student. They will have opportunities to have an internship with credit, right? So you can do the internship and get credit points for it. And in that case, it's like a subject but an internship, right? So your internship, you will gain credit points for your internship, and that way, you get experience, right? But it's also easier because as an international student, if you go through the university, they will filter out the fact that you're an international student, if that makes any sense. And they can still give you the internship. Whereas if you apply to a company directly, they will know that you're an international student and they won't give you the internship because that's how they are at the moment. Or that's how it was hard when I studied commerce, right? Last year or the year before that, it was really hard to get an internship, at least in my day. Uh, right? Because the labor market is very dynamic. Things can change very quickly. In my time, last year and the year before that, super difficult for international students, especially with a commerce degree. With an undergraduate degree, I should say, if you have a postgraduate commerce degree, it's a different story completely. But yeah, I would say apply through the university because the university kind of knows that it's hard for international students and it will prioritize international students to get an internship over local domestic students. At least it may happen. It depends on the coordinator of the subject as well, the person that's foreseeing that process. I met the person foreseeing my process of giving me an internship, and she told me that she gave it to me because she knew that it's hard for international students, whereas local students find it very easy. So yeah, the main idea I think is to find a way to get Australian permanent residency first, because as an international student, life can be a bit hard. What are your thoughts on e-commerce? What are my thoughts on e-commerce? Uh, Very lucrative. Very lucrative. I know quite a few people making a lot of money off of it. I think if you know how to, and more things will transition to be online. So I think if you know how to sell online, you're gonna be set. Now you might not make a lot of money. In some cases, because you're not that great, you may not be that great, but you're still gonna make decent money. One of my friends, he makes only like $4,000 a month off of it. Uh, but he only works 5 hours a week to make that, right? So as a university student, it's a pretty good part-time gig, right? It's a good side gig, e-commerce. If you work full-time, obviously you can scale it and make significantly more. I'm actually currently in Sydney as I moved from Melbourne to study at University of New South Wales. I have to go to classroom. Can I? Yes, you can. You can access the recording. I have people all the way from Sydney listening. That's cool. Cool. Wait. I have to. Now, before you guys go, I just wanted to give you some tips about uni life. Be productive. Unfortunately, in university, nobody is going to chase you after you to get to do your assignments or to go to classes. It's all up to you to get things organized. Don't fall into the trap of watching lectures at two times speed before your exams. It doesn't work. Trust me, I've tried it with calculus. Um, it doesn't work that well. Try to do whatever lectures you have missed within the same week and do the assignments on the same week as well. And always have someone to help you and keep you on track, because it's really important to do that. It's really important to have friends. Your friends are your network, and your network is what will support you throughout uni and throughout life. Do not sacrifice your friends for a university degree, because you can always get a university degree, but you can not always find amazing people to be around. Um, and my best tip, my pro tip would be make connections with students in year levels above you, as they can give you good advice. And even use LinkedIn or something. Join clubs and societies and add some extracurriculars. They can be very beneficial. As I said, make the most out of uni, because the years will fly by, and watch out for yourself, watch out for your health, and watch out for your family. The years do fly by, and you do want to make sure to spend this time with people that you love and do things that you enjoy. As I said, companies hire the best, and you can only be the best if you're doing something you enjoy, or if you're really productive and well disciplined. It depends. But it's not feasible and it's not productive to do things that you do not manage well in, and that's my main advice. Wow, this is a huge strain talking for 2 hours and a half. Right. Any questions? I'm here to answer any more questions before we go. So I think I've covered enough topics. I think I can go on and talk a bit more about the accreditation side of things, but I think it's best if you guys do that research yourself when it comes to accreditation. How many of you have heard before of the CFA or the. Actually, let me ask a question. How many of you have heard of CFA? Let me change my question. Do you guys know what a CFA is? Yeah, so as I was saying before, for some of these degrees, you do need to get accredited to work in that field. Like CFA stands for Chartered Financial Analyst. So to work for a hedge fund or a venture capital firm or a private equity firm, you cannot really work for them unless you have this sort of accreditation, and you cannot really do research unless you have this sort of accreditation. The problem is it will always have a reoccurring fee, right? So let's say you sit the CFA exam and you pass all levels of the CFA. Let's say you pass all levels of the CFA, and you are only and you go this in 2025, right? If you want to keep your CFA accreditation, you just have to keep paying the CFA Institute. So at the end of the day, it might be kind of a money grab as well, right? And it's a very expensive course to study. The CFA is really good though in terms of getting a job. Really valuable for getting a job. You will be preferred above all to get a job. Like it's pretty awesome. The problem is there is an equivalent to it, which is a master's in finance. A master's in finance is equivalent to a CFA in Australia, but it won't help you get a job in America, right? Because the CFA is internationally recognized. That's the thing with the CFA. It is internationally recognized, and that's the edge that it gives you. But I would not say it's as prestigious or as important as a CPA, because as a CPA you can sign off documents. As a chartered public accountant, uh, you have a bit more power as a CPA, I would say. But my best overall advice for you guys would be try and do the research necessary. Try and look at what jobs you would like to do and do the research necessary to see what qualifications you need to do that job. But again, focus on something that you like, even though it's kind of hard to find that. Try and think hard about it. Cool? Alright. So that's the accreditation side of things that I was trying to cover. Thank you for joining my lesson. I shall see you guys in another lecture series if I am the one streaming. If not, you can talk to me. You can add me on LinkedIn. I don't know. You can ask me for advice whenever. See you guys. Bye.